Good morning, dear students. I hope you all are safe and well. In today's video, we are going to start a new chapter, that is Books of Original Entry Journal. Before starting this chapter, we had already discussed about the rules of debit and credit, and with the help of these rules of debit and credit, we can record the journal entry. So, let's start this new chapter. Comes towards the meaning. Journal is one of the basic book of original entry in which business transactions are originally recorded in chronological, that means day-to-day order. So what is journal? Journal is a book in which we record all the business transactions initially in books of accounts in a chronological order. That means day to day, whatever the business transactions being conducted in a business, these all business transactions are going to be recorded in journal. Now comes towards the functions of journal. First one, to keep chronological, that means that wise record of all the business transactions. So the first function is to keep a record of all the business transactions. And now comes towards the second one, that is to analyze each transaction into debit and credit aspects. As we had already discussed about the business transaction, that each and every transaction having two aspects. So with the help of this journal, we can analyze these transactions, that which one is debit aspect and which one is credit aspects. Got it? Now comes towards the another function, that is to maintain the identity of each transactions by keeping a complete record of each transaction at one place on permanent basis. So with the help of journal, we can identify each and every transactions, and with the help of transactions we can record these all transactions in a one place on permanent basis. Got it? So we have discussed about these functions of journal. Now comes towards the format of journal entry. So here this is the format of journal. The format of journal is as follows. In format of journal, here is 5 columns. First column is known as that date column. Second column is known as what are particulars. Third column is known as what are ledger folio. Fourth column is known as debit amount column, and fifth column is known as credit amount column. Got it? And here we'll record all the business transactions, and here we'll record the narration of these business transactions. Got it? So let's discuss in brief. So this is date column, and I have written this is number 1, and number 1 shows the date. In the first column, date of transaction is entered. That means whatever the business transactions being entered in an organization, these business transactions will be recorded with a date here. Got it? Now comes towards the second one, that is particulars. Each transaction affect two account, out of which one account is debited and another account is credited. Name of the account is debited is written first, followed by the word debit. Here you can see that first account will be debited and second account will be credited. As we have discussed right now, each and every transaction having two aspects. So first aspect is will be debited and second aspect will be credited. And this first aspect followed by the word debit. Clear? Written words at the end of the column, while the name of the account to be credited is written in the next line, preceded by the word to. Here you can see that the credit amount will be written here, or credit account will be written here with the word to. Got it? So in particulars, we'll record the business transactions. Business transaction in terms of debit and created. Now comes towards the third one. Here you can see that about narration. So what is narration? After each entry, a brief explanation of the transactions together with necessary details is given. That means in this column we'll record the brief explanation of transactions together with the details, and this explanation is called what? A narration. Clear? Now comes towards the another one, that is ledger folio. Here you can see that it is a third column of this general format, and this column is known as what? A ledger folio. And the ledger folio, all entries from the journal are posted into ledger account. As we had already discussed in our earlier classes, that whatever the journal entries being recorded in books, after these journal entries we will classify the all business transaction in separate account. That separation is known as what? A ledger accounts. Got it? And this ledger, or the page number or folio number of ledger account, is known as ledger folio. So the page number of ledger, that means after recording the journal entries, we record or classify these all transaction in particular accounts, that is what? A ledger. So that ledger's page number will be recorded here. Clear? Now comes towards the fifth one, that is debit amount. So where we will record the debit amount, here you can see in a fourth column will record the debit amount. Clear? So and in this column the debited is written, the amount of debit amount will be written. And you have seen this sixth column, that means fifth column, create amount. In this column the amount created is written. Here you can see that this is the last and fifth column, in which the credit balance or created amount will be written. Got it? So I hope you have understood the concept of general and format of general. Now let's proceed. Here note, I have written that all the columns except the ledger folio. As I have discussed about the ledger folio, you can see that this is the column of ledger folio. Okay, so all the accounts except ledger folio column are completed at the time of generalizing. The ledger folio is written at the time of posting the transactions uh, in ledger account. So whenever we do the ledger work, on that time we'll record that particular page number will be in the column of ledger folio. So right now here is no use of ledger folio in way of recording the journal entry. So we'll only use the date column, particulars, debit column and credit column. Clear? Let's proceed. Comes towards the steps in journalizing. So what are the steps in way of journal entries? The first step is to determine the accounts that are to be debited and credited in the transaction. Then we'll have to determine which account should be debited and which account should be credited. These all things we will determine in way of journalizing. Clear? That means in way of recording the journal entries, we'll determine that which account should be credited and which account should be debited. Clear? Now comes towards the another step, that is determine the nature of accounts to be debited and credited. Nature of accounts, as we had already discussed in our earlier classes also, that we are having five nature of accounts: assets, liabilities, capital, revenue and expenses. Here you can see also. So first of all, we'll determine the nature of accounts, and with the help of these natures, we'll identify that which one will be debited and which one will be credited. Clear? Now comes towards the another step, that is applying the rules of debit and credit on accounts to be debited and credited. Here we'll apply the rules of debit and credit that we had already discussed in our earlier video or classes about the rules of debit and credit. And here also I have given again the rules of debit and credit to recall all these rules of debit and credit. So let's start again the rules of debit and credit. On the basis of traditional approach, we know very well we are having three types of accounts. First one, that is personal, second one, that is real, and third one, that is nominal account. In personal account, whenever we know that debit the receiver and credit the giver. With the help of real account, we know the rules: debit what comes in and credit what goes out. And with the help of nominal account, we know the rules that all expenses and losses are debited and all incomes and gains are credited. Got it? So we had discussed these all rules with the help of traditional approach. Now comes towards the modern approach. In modern approach, we have classified the accounts in five types. First one assets, second one liability, third one capital, fourth one revenue, and fifth one, that is expenses. Okay, whenever assets increases, it will be recorded in a debit side, and if assets decreases, it will be recorded in a credit side. Now comes towards the liability. Whenever liability increases, it will be recorded in a credit side, and if it decreases, it will be recorded in a debit side. Clear? Now comes towards the capital. Whenever capital increases, it will be recorded in a credit side, and if it decreases, it will be recorded in a debit side. Now comes towards the revenue. Revenue also, whenever revenue increases, it will be recorded in a credit side, and whenever the revenue decreases, it will be recorded in a debit side. And now comes towards the last one, that is what are expenses. Whenever expenses increases, it will be recorded in a debit side, and if it decreases, it will be recorded in a credit side. So again, we have discussed the rules of debit and credit, and with the help of these rules of debit and credit, we can record the journal entry in books of accounts. Got it? So please learn these all rules, and with these rules only we can record the all business transactions. Clear? So let's start with a question. Now comes towards the question, and with this help of this question we'll record the all business transaction in journal. Clear? So let's start this question. Pass the journal entry for the following transactions. Here you can see the date in which transactions being conducted in a business. Here you can see the all business transactions. Here you can see the amount of these all business transactions. Clear? So in April 1st, 2020, Nitin started business with cash. So Nitin is started business with cash worth rupees 1 lakh on April 1st. Clear? The second transaction is on April 2nd, that is purchased office furniture for cash worth rupees 5,000. On 3rd April, the transaction is purchased goods for cash worth rupees 20,000. On 4th April, the transaction is purchased goods from Hari and Company worth rupees 1 lakh. On April 5th, sold goods against cash worth rupees 20,000. On April 6th, the transaction is sold goods to Ramesh and Company worth rupees 75,000. Now comes towards the April 7th. The transaction is paid salary to staff in cash worth rupees 15,000. Now comes towards the April 8th. Paid electricity bill, that is what a 2,000. On April 9, the transaction is paid telephone bill of the business, that is what a 500. And the last one, that is on April 10, the purchase stationery in cash worth rupees 250. Remember one thing in your mind, that these all transactions is being conducted in a business. So we will record all these business transactions in a business, and we record this journal entry in business point of view. Clear? So we do these transactions or record these all transaction in general with business point of view. Now comes towards the solution. Here you can see the solution. Journal of Nitin. As I've discussed right now, the format of journal, and in this format they are having 5 columns. First one, that is date one, second one, that is particulars, third one, that is LF, that is ledger folio, fourth one, that is debit column or debit amount one, and fifth one, that is credit amount column. Got it? So let's start. As right now we had discussed about this question, and on the basis of this question only we will record the transactions in general. So please record or please note down this question in your copy. With the help of this question only we can record this transaction in general. So students, please note down this question in your copy. Then after we will start the solution. So let's proceed towards the solution. So the first question is, first transaction is Nitin started business with cash worth rupees 1 lakh. So the journal entry is, you can see that on 1st April, cash account debit to capital account worth rupees 1 lakh and 1 lakh. Right now I have told you that each transaction having two aspects. First one, that is debit, and second one, that is credit. Clear? So here in business, cash is also increasing and capital is also increasing. Got it? And cash is a assets, and whenever assets increases it will be recorded where in a debit side, according to rule of debit and credit that we have discussed in our earlier classes also, and right now also in the rules of debit and credit. Okay, so the cash is increases here in a business, so it will be recorded in a debit side according to this rule. Clear? So look at that, the cash account debit to capital account. Capital is also increasing, and whenever the capital increases that will be recorded where in a credit side. Got it? And this is the narration being capital introduced by the Nitin into the business. Got it? Right now, and I repeat, we are recording this business transaction on business point of view. Got it? Now comes towards the another one, that is purchase office furniture for cash worth rupees 5,000. So we have purchased the office furniture. So what is coming in our business, that is furniture, and what is going out from our business, that is cash. Got it? So the furniture account will be debited and cash account will be credited. So the journal entry is furniture account debit to cash account worth rupees 5,000, 5,000 being furniture purchased. Got it? So furniture is an asset for us. That's why whenever assets increases that will be recorded in the debit side, and cash is also a asset for us. And right now on behalf of purchasing this furniture, cash is going out, that's why cash will be recorded by in a credit side. Got it? Now comes towards the another question, that is what a purchase goods in cash worth rupees 20,000. So the entry of that question is purchase account debit to cash account. Children, remember one thing, whenever we purchase the goods for resale, that purchase of goods denotes purchase account. Clear? So purchase account debit to cash account. Here purchase is treated as an expenses. That's why all expenses, whenever the expenses increases, that will be recorded in a debit side. Got it? So purchase account debit to cash account 20,000, 20,000. Here cash is going out, that's why it is going to be recorded according to rules of real account also. Or we have already discussed that whenever assets decreases, it will be recorded by in a credit side. Clear? So the narration of this question is, solution is being the goods purchased. Now comes towards the another one, that is purchase goods from Hari and Company. The another transaction is purchase goods from Hari and Company. Right now we are purchasing the goods from Hari and Company, and we are not paying cash to him, or this is not a cash transaction. That's why there is no cash is going to be out from the business. So the entry will be purchase account debit to Hari and Company account. Purchase is an expenses, and whenever expenses increases, that will be recorded in a debit side. Clear? And to Hari and Company, as we have already discussed about the rules of debit and credit, and in rules of debit and credit comes towards the rule of personal account, debit the receiver and credit the giver. So Hari right now is giver to a business. He is giving the commodities to us in credit. That's why he will be recorded by in a credit side. Got it? So the purchase account debit to Hari account rupees 1 lakh, 1 lakh being goods purchase on credit. Got it? Now comes towards the another transactions, that is on April 5th sold goods against cash. So the entry will be cash account debit to sales account amounting to rupees 20,000, 20,000. In way of selling the commodities, we are getting the amount of money or cash. So assets increases, and whenever assets increases, that will be recorded by in a debit side. And sales is a revenue for us, that's why it will be recorded by in a credit side. As we had already discussed the rules, and according to rules, whenever revenue increases and sales is a revenue for us, that's why it will be recorded by in a credit side. Got it? Now comes towards the another one, that is April 6th. And April 6th the transaction says sold goods to Ramesh and Company worth rupees 75,000. Right now we are selling the commodities to Ramesh and Company on credit, not in cash. That's why cash is not coming into a business. Got it? That's why we will record the entry as Ramesh and Company account debit to sales account. Why Ramesh and Company? Because according to personal account, debit the receiver and credit the giver. Right now Ramesh and Company is receiver for us and he is debtor. That's why it will be recorded by in a debit side. And to sales account, sales is a revenue for us, that's why it will be recorded by in a credit side. Got it? So Ramesh and Company account debit to sales account 75,000, 75,000 being goods sold on credit. Clear? Now comes towards the another entry on April 7th. The transaction was paid salary to staff in cash. That means the organization paying salary to staff in cash. So the entry will be salary account debit to cash account. Salary is an expenses for us, that's why it will be recorded by in a debit side, and cash is going out, that's why it will be recorded by in a credit side. Got it? Being salary paid 15,000, 15,000. Here also we know very well that whenever expenses increases, that will be recorded in a debit side, and cash is a assets for us and it is decreasing, that's why it is going to be recorded in a credit side. Got it? Now comes towards the April 8, the transaction is paid electricity bill. We are paying, that means business is paying electricity expenses, and the entry will be electricity expenses account debit to cash account. For business, electricity expenses in a expenses, and whenever expenses increases, that will be recorded by in a debit side. Got it? And on behalf of expenses, what is going out from our business? That is cash. Here assets decreases on way of cash, that's why it is recorded here in a credit side. Clear? So the entry is electricity expenses account debit to cash account 2000, 2000, being electricity bill paid. Now comes towards the another one, that is April 9, and April 9 shows the transaction is paid electricity bill, sorry, paid telephone bill. So telephone bill or telephone expenses is also an expenses for us, that's why the entry will be telephone expenses account debit to cash account, being telephone bill paid 500, 500. Here telephone expenses is expenses for us, and whenever expenses increases, that will be recorded in a debit side, and on behalf of these expenses, what is going out from our business, that is what a cash, that's why it is going to be recorded in a credit side. Clear? And now comes towards the last transaction, that is purchase stationery in cash. So the entry will be stationery account debit to cash account, being stationery purchased. So we are purchasing the stationery, so stationery are coming into an organization, that's why it is going to be recorded in a debit side, worth is 250, and on behalf of this stationery we are paying the cash, and cash is going out. Got it? That's why it is going to be recorded in a credit side to cash account 250, being stationery purchase. Clear? So right now we have discussed all these transactions, and for these transactions we have already discussed the journal entry of these all business transactions, and this is the last one, that is total of debit column and credit column. Both will same in way of totaling of debit or totaling of credit, that is 3,37,750, 3,37,750. I hope you have understood this question as well as the solution of this all business transaction, or how to record these all business transaction in general. This is clear to you, and we have already discussed about the meaning of journal, format of journal, and steps of journal, and again we have discussed about the rules of debit and credit. Please learn these all things, rules of debit and credit, if you haven't learned, and with these rules of debit and credit, stay in practice or do practice of these all questions, and I will provide the assignment to you all in our next class. So write down these all question as well as solution in your notebook, and understand how to record this all transaction in books of accounts. And this is the end of this video today. Stay at home, stay safe. Thanks for listening, and as always, God bless you all.